Well, this is one of the more significant holiday weeks in the market. So this is Memorial Day, it's Spring Bank Holiday in the UK, it's Memorial Day in the US. So I know a lot of our listeners are in the US, and those who aren't are probably going to be affected a little bit by just a low volume, low volatility on Sunday and Monday, depending on where you are. So mostly Monday, I suppose, if you're out of the US. It's this is the last week of the month, and this is not one of those weeks that kind of overlaps into the first Friday where we would get start getting a sneak peek into non-farms payrolls and ADP and such. Some of those real in vogue announcements that traders like to pay too much attention to. However, there are a couple of things. I would actually say that there's really two things going on this week. There is some data coming out of New Zealand, so this is why we're looking at the Kiwi dollar here. And there are home sales information. There's also GDP, but we'll get to that in a second. So I suppose three things really, with the not a ton of emphasis on GDP, but those two are have some ability to, from a scheduled announcement basis, they may have some ability to create some volatility in the market. Like last week, I'm kind of falling back on, look, it's more or less the unknowns that are likely to really push the market around, which was what we saw last week. It was kind of these surprise announcements and events happening in the equity market, et cetera. So we're going to want to be watching that very closely. Now, just an FYI, the equity markets in the U.S. and the U.K. will be closed on Monday. So not a lot to worry about there until we get into Tuesday's information. So we're starting with the Kiwi. We get trade balance on Monday, or if you're in North America, that's Sunday that's happening. We already have the data. It's come out with a deeper deficit than expected, and a significantly deeper deficit than we saw last time. So not good news for the Kiwi, and yet we're not seeing a ton of reaction. However, that means that for traders who were buying this bounce back up on the Kiwi, headed towards 795 area, that may stick as resistance. Right now, I think that's a very legitimate resistance area. If I get rid of a few of the lines on my charts, I would say it's probably a couple of places. Number one, we're at a fairly significant resistance level where the market bounced a couple of times in February, again in twice in April, just broke it briefly the very beginning of May, and now we're back. So this is I would say more than a resistance area, this is likely to be a fairly significant consolidation zone, and one that I don't expect the market to break up above 79.50 in the near term. We may get a little bit of a positive drift, but this is the trade data is going to weigh on expectations a little bit. So we may actually see, unless we see some extraordinary weakness on the U.S. dollar, which is certainly not out of the question, we'll probably see some fairly tight ranges and a bias to the downside this week. Now, the one thing that could change this whole issue, though, is Monday's release of inflation expectations. So if we get something that surprises to the upside, growth is causing excessive inflation, may increase the probability of a rate hike or increase the probability of rate stability in the near term, we may see a little bit more of a boost to the upside. So we'll be watching that one. That's a 1-2 punch coming out on the Kiwi, and probably one of the biggies for this week as far as economic news announcements that are going to have a direct impact on market volatility. I mentioned of a couple of announcements that are likely to have an impact on the market. The first one, or of the two or three that are likely to have some impact on the market, one of the first ones that I'd be paying very close attention to, particularly as it relates to the dollar, is new home sales in the U.S. So this comes out from the Census Bureau. And right now I'm looking at the Euro-US dollar because I'm very interested to see how this little formation comes out. This is looking like the beginnings of a cup and handle formation, which is something that was kind of more or less popularized in the stock market by a famous analyst, William O'Neill. So Bill O'Neill popularized this pattern where you get this rounded bottom. The market comes up basically to the lip of the cup where you could oftentimes see a gap, by the way, which this fast-moving market could really take the place of a gap. And then it levels off here a little bit, creates a little handle here. It's a bullish pattern. So we're looking for a breakout to the upside. New home sales could be the catalyst for that, and that could happen early this week. So that may be one to watch. I know myself, if I were looking for an opportunity, I might just be looking for something that's breaking up above the 159.50 range. So once we start getting into the historical highs, that may become very, very interesting for a new long position heading up to potentially 160, 160, 164 even, 164.5. One thing we can do to make a bit of an estimate here as to what kind of a profit target that look like is just to apply Fibonacci retracement to the high in the market to the low of this correction in May. And now I'm going to have to scoot my scale down here a little bit. And there's our 161.8% retracement level. Coming in right about 164.75, so almost 165. That would be I think a breakup above the 159 level would not be a surprise to hit the 165 range at the 161.8% retracement level here based on our Fib retracement. We're going to look at the dollar CAD as we wrap up the week. I mentioned this was a pretty light week for economic news, but the next biggies are actually GDP coming out of both the U.S. and Canada. Now, there are a couple of things to make sure that you keep straight. So, number one, this is the preliminary GDP numbers from the U.S. on Thursday. And what that means, GDP comes out every quarter in a series of 3 announcements. There's advanced, preliminary, and then final. And so we've already seen advance. The advanced numbers have been released, and so we know approximately what that quarter looks like, what first quarter looks like. What we're interested in is revisions. So that's what happens in preliminary and final is revisions. And in particular, we're interested to see what happens with the inflation numbers that come out with GDP. So what's the deflator look like? That information is where the potential for volatility comes from, even though we've already seen the advanced numbers, if you will. So it's kind of you get most of your volatility with the advanced release, and the volatility that you get with the next two are typically only when there's a significant revision. So we're not anticipating one. I think it's very unlikely that we'll get a big revision, but it's one that we definitely want to watch. And then on Friday, we get Canadian GDP. Now, again, this one is a little bit different than a lot of them in that it's monthly. So quarterly GDP numbers from Canada are they're just a wrap-up. The monthly data release can be interesting and can introduce a little bit of volatility if there's a surprise, obviously. We're not expecting one. But this is an interesting pair because if we back up here a little bit off of this chart, you can see that there's been a very rough channel in play from about 103 to 1.03 to about 1.9750 or so. The market, we're getting real close to that lower end. We're at 98.77 right now. So is this going to force us down to this lower support level? Because that is going to create some volatility just as traders start to deal with the fact that we're at this long-term support level. Conversely, if we get really strong U.S. numbers, and if oil isn't going completely insane, which is, again, that's not necessarily an extremely likely scenario, but if we get a good revision on the U.S. dollar and oil stays under control, we may see a real pop-up off of this a little bit early. So dollar CAD shorts, this may be one of those times that you don't wait quite for support to get hit before you're applying some kind of risk control, not necessarily liquidation, but you may want to have a hedge in play there to cover yourself against Thursday and Friday's GDP releases. So we'll be back on the site with more information and obviously following up on each of these releases as they come out this week.